And my Oscar is getting his video fixed. There he is. Let me spotlight him. And again, I want to thank everybody for joining us tonight. Tonight's going to be another fantastic show. Thank you for joining us here at Creative Real Estate University. Again, we have our shows 7 p.m. Eastern Standard Time. We have a couple of Tuesday nights coming up and planned, so keep an eye out on the postings on the Facebook group. And if you're catching us for the first time, please join us on Facebook, Creative Real Estate University. We'd love to have you. We talk about all good things, real estate investing. And tonight is one of these great topics that we always talk about, but always have more questions when it comes to private money lending. We thought we'd bring in a heavy hitter, Oscar. He's also on Facebook and YouTube and Twitter. You can find him as the Intentional Investor, or We Buy Houses in Chicagoland. But I know he's got has other handles and names out there as well. But Oscar, if you want to introduce yourself to the group.
Of course. Well, thanks for the opportunity, guys. My name is Oscar. I've been a real estate investor for about 7 years now, but I've been an entrepreneur about 20 plus years. I've had a lot of different businesses. I started with an engineering background. I graduated from U of I and went to Motorola and worked for Motorola for 12 years. And in the middle of working, I'm also was a wedding photographer. So doing that for 6-7 years, and then 2012 I resigned from Motorola to start a new business, which is a family restaurant. So we had that for about 8 years, and then we unfortunately closed down during COVID. But in the meanwhile, I started my real estate journey in 2016, and that was because I knew that the restaurant business is not going to last forever, and I'm looking for a more passive income because restaurant, as probably a lot of people know, is a lot of work. I enjoy it. I enjoy the hospitality business out of it. I enjoy the income and the interaction with the guests and everything, but I know it's like a hamster wheel, right? So it's always, you always have to do the next day, and that's why real estate attracted me. And so 2020, when COVID happens, I'm in Chicago, Illinois. The governor just basically say everything has to stop, shut down, can't do business. So everything is stopped. Fortunately, I had real estate at that point. I already have some rentals as passive income. So I just decided to close the restaurant, not renew, and just go real estate full time. And fast forward 7 years, it's pretty much a very exciting journey still. So, and in terms of the lending side and everything, I have, so as I mentioned, I work in Motorola for 12 years. So that's my main kind of source of income, lending. So which is based on 401k. So when I resigned from Motorola, I roll over my 401k to a solo 401k. And I self-directed that. So I have about $250,000 to start lending, right? And when I joined real estate, I used that 401k to start lending to other real estate investors too. And then fast forward, also my wife resigned from her job, and then I converted her IRA, 401k to IRA, to Roth IRA, and self-directed that, and so we use that for lending too. So those are my sources for lending as a lender, private money lender. But I also do a lot of borrowing too, similar source and everything. So that's why I'm kind of like in both sides of lending and borrowing, and I know just how to be responsible as a borrower, and I also know what to ask as a lender. Right? So
you've been on both sides of the table. As well as lending.
Yeah.
We've had discussions in the past about how to create a self-directed IRA. The process itself is pretty simple to do. And funds now are available to invest in almost anything, not everything, but almost. And those fun things is real estate. whether it's your personal business, right? A house that you're going to buy for rental, for example, or loaning that money out to another investor, let them do what equity and just send you a nice return on your money. Those are all different options that are available to real estate investors.
Yep.
So COVID was exceptionally hard on small business owners, really, really hard on restaurant owners, especially in a town like Chicago.
Yeah.
It must have been really rough. Any desire to go back and start all over in the restaurant business?
I wouldn't mind, but I would change it slightly different. I would buy a restaurant business at this point that I could shape and mold in terms of the branding. So yeah, I'm always open to buying businesses now, which is kind of like one of my focus. So I can partner with other investor and also other private money lenders to, instead of just doing it in real estate, but also seeing businesses with assets that's running and profitable to buy. So,
we may all have to have you back on for another show one of these days and just strictly talk about, instead of real estate, talk about buying businesses.
yeah. And the good thing is I've been in multiple different businesses, so I know, typical Asian, I know I'm good at numbers. So, I always look at, my mind always naturally go, and when I see numbers, it just computes easier. So I know how to look at the profit and loss and, all those stuff to determine businesses. So.
No, and I know you're a hustler because even when you're working full time for a company like Motorola, you're still working as a photographer on the side. You still every day trying to figure out how to make a little more money.
Right.
Work, so.
And what's funny is that's when I realized entrepreneurship is really for me, because at one point, I my revenue is in wedding photography is doubled what I earned from Motorola, right?
Oh,
and
wow.
That's kind of like the turning point where, like, maybe I should do something full time instead of working for Motorola. And we use the fund that we save from the wedding photography and other business to start the restaurant, right? So it's just kind of one of those things when you hustle and something's working, you realize that you're probably better in something else. So,
and when you find certain businesses, unfortunately, the restaurant business tends to be this way, is it also ends up being a time trap.
Yeah.
So when you are working for yourself, right? You're doing that entrepreneurial thing. Without you, the business kind of stops.
Correct.
Especially if you're the owner of one restaurant, and everything relies on you. So that business model can wear you out too. 24/7, 7 days a week, 365 days a year. That's your whole life. So
no, that's really the breaking point, because you work 6-7 days. Even when you're gone, you're thinking about the restaurant, and that's when I have 2 daughters, and that's when they were growing up, and they had fun growing up at the restaurant. But at one point, I am trapped in the business, right? Instead of working on the business. So while in real estate, you start working in the business, but you can create systems and you can create teams, and suddenly you can grow, and as long as you have a system in place and peoples and teams, then you can kind of work on the business instead and get that. It's not just the cash flow, but it's the time freedom, right?
Right.
You can be I can be an Uber dad, and I'm fine. I love taking my daughters to work. To school, and then go to work, right?
Yeah.
So that's the fun part.
And I try to instill that into my kids, is that your hobbies can be income producing as well, right?
Correct.
There's plenty of people with bad habits out there that cost time and cost money, rather than create freedom and location and time, as well as wealth. So you choose your hobbies.
Yeah.
So explain to us, how did you get into the private money lending side? Did you start by looking for funds to borrow for a real estate deal, or did it start the other way around? When you retired from Motorola, you had funds available and you're trying to figure out how to use them.
So it was just kind of naturally, a good coincidence, because I was basically doing what everybody is doing, which is the Burr method, right?
Mhm.
So you would buy something distressed, you would get a hard money loan, or a loan, right? At that point, I realized that if you don't have any experience, hard money loan was very, very expensive, right?
Yes.
And even back in 2016, and now, it is very expensive, but back then it was kind of expensive too, especially if you don't have experience, right? So that's when I learned about the private money lending. And I also, when I learning how to become a borrower, I also realized that, hey, I actually have money that I can't use right now that I can make more money on, right? Because at that point, what I realized when I moved my 401k into a solo 401k, I actually lost money from all these years, from the 12 years, because I start looking at the statements from my 401k that was managed by, I'm not sure who, I think Hewitt or whoever that just auto manage it, right? Because
Right.
I wasn't that great of a money manager back then. so I was just like, whatever that I put into Motorola, I just kind of forget about it, because I thought I don't need the money until I retire, right? And when I resigned and I saw the statement, what I thought that I'm earning, 6, 7, 8%, it's more like I lost money.
Yes.
Because after I see the month to month and the year to year, it's barely making any money, right? So that's a good thing, because it's a realization that I don't want to put my 401k, my retirements, into another mutual fund. I don't want someone else to manage my funds anymore, right? And at the same time, I'm looking at the real estate. I'm looking at people. I connected with investor that's willing to lend their money to me from their retirement funds. So it was just like coincidence, right?
Yes.
I'm
Right.
like, well, if he can do it, I can do it too.
Yeah.
So I started about the same time, right? I started borrowing money from people for my first project. It was just to prove that I can do real estate and I can, be responsible with my time and money and resources. Me and my partner, we actually did a JV. So we used his money, as a partnership instead of him being a lender. Now he is kind of still he was a lender because I do everything, right? But
Right.
just to minimize the risk, he's involved in terms of the JV, right? So he kind of have that partnership in there instead of just being a lender, right? So giving him more of the equity there, right? Which is, that's kind of like a tip for everyone else that, sometimes it's good to, start a new relationship as a partnership too, depending on your style, right? Some people, they just want to lend, right? Some people, they just, I don't want to be involved in real estate. I just want to make good money on my retirement funds, for example, right? I started the first time because I know real estate. I didn't want to become a partner. I just want to lend from the from my retirement funds, right? So because I understand how they are going to actually use the money, right? So I started as a lender, just basically I wanted to make money on my 401k.
So, Oscar, we get this question asked all the time: is
Mhm.
well, why would you use somebody else's money when you have your own money that you could have used?
Yeah, that's a great question, right? So for me right now, even when I started, right, you will encounter more deals than the money. That's always my struggle, right? There's
Right.
so many deals out there that you can pretty much cherry pick. And even now, right? People say you can't get deals, you can still get deals, right? Obviously the numbers and calculations are different, but you can still get deals. I still often have to turn down deals just because there's lack of funds, right?
Right.
But for me as a real estate professional, we are always wanting to take opportunity because there are money to be made either on a downturn or an upturn, right? So we are always looking for opportunities, and we are always looking for ways to capture that opportunity because during that time, that opportunity exists just during that time, right? Because after that, it's just gonna be different ones, right? So we try to capture the most opportunities available. For example, in 2020, 2021, right? The only thing I did was flips because it was
Okay.
so easy to flips,
Yes.
right? I mean, this is why a lot of people went to real estate too in 2020 and 2021, because you could just paint a house and you get over asking price.
Yeah,
Right now, the market's
it
changed now.
happened. Yeah.
Yeah, the market's changed now, and we were doing well in 2020 and 2021 because I already have experience I already have 4 years of experience. I already have my crew and everything, right? Which is also part of the things, when you look for in a borrower, right? What kind of experience, right? What type of crew he has or she has, some sort of a portfolio or resumes of the experience, right?
Yes,
So
absolutely.
but I probably flipped like maybe 20 to 30 properties in the last 2 years, all partnering with people that were willing to make more money during those time, and by showing them the result from past experience, I was able to not only convince private money lender, but also make them feel secure. That's the important thing. Right? What does it make to have them feel secure, and that their investments not only going to make money, but also going to get return with the correct interest and be able to recycle that over and over again?
And you brought that up a couple of times now is the experience part. And one of the things that, we do some loan brokering. One of the things that always comes up is for people who've never done a new construction or fix and flip, finding that that first time it's out there, you can qualify.
Yeah.
It's going to cost you.
Mm-hmm.
Sometimes if you can partner with somebody, right? So Shane and Oscar get together, we do a deal. Oscar has the experience and he has the crew and he's got the know-how.
Yep.
We can partner up and we can do 2, 3, 4 houses together. Now
Right.
I go on to a lender now myself and say, listen, I've had a partnership and my name's tied to these 4 houses that we've rehabbed. I now have experience, how that ball gets rolling. So
yeah,
partnerships with the right people bring lots of value, not just in financial terms.
Yeah. And I still do partnership at this point. It's still, as I enter new markets, I'm in a few different states now. I'm doing new construction in Florida, a build to rent. And I'm also doing some flips in Southwest Florida. I'm still active in Chicago and also Northwest Indiana, right? So
all over. Great job.
Yeah. So as I partner on the 3 different states, a lot of times my private money lender is also my boots on the ground.
Yeah.
Right. And that gives them a confidence that this is getting done correctly. Right. And a lot of time right now, a lot of my network of private money lenders are also newer investors or maybe even realtors, right? They can offer value in terms of, hey, this is an area where if you can help me find a property that we could flip together, I'll be interested in using, my funds, right? So those are a lot of things you have to know. What is it that the lender even it's not just making interest a lot of times, right? There's a lot of different values that you can give. Right. And a lot of times, when you have a visionary or a go-getter personalities, that's when you can attract a lot of people that, more analytical, but they do have the funds, but they want to learn. Right. And so you will partner with them or you will tell them, hey, if you like to what we call a learn and earn program. Right. In my company, we have a learn and earn program. Right. So what it is you'll be a lender to my company on a set of projects, and we set that project, and you're welcome to tag along, and you're welcome to visit the properties, and you're welcome to ask any questions. And I give them updates every week on a Friday, when I visit all those properties, and we'll tell them all the numbers, and they get to learn. Right. Yes. At the end of the day, they get their money back and they earn something.
And Cindy and I do that same thing. Is we just, if you want to be our partner, our books are open to you, and not necessarily just this one project. come on and join our meetings where we talk about all of our projects going on. You know, whether single family homes, short-term rentals, long-term rentals, mobile home parks.
Mm-hmm.
You get to see all of that and then learn
Yep.
as much as you want.
Yeah, for sure. Yeah, and that's really, to a lot of people, it's the attraction that that makes them want to lend to our company because they do want to learn, and a lot of times, sometimes they do have a project that they would bring that they think is a good idea or a good could make a lot of profit, but they don't know the right contractors, they don't know the skill set, right, to rehab it or to take it to the finish line, right? So they would come to me and they would present that, and we would underwrite that together, right? And then when we underwrite together, I would present them the exit strategies, right? And a lot of them sometimes, hey, then after we underwrite them, we say, hey, what if we, use your funds in the beginning and we'll do a BRRRR, right? We'll partner together and we'll do a BRRRR. And then at the end, we'll own this 50-50, right? But I'll take you to the finish line. I'll make sure that the project is done well. And at the end of the day, when we finish, we can do an STR or an MTR, for example, right? And we'll own that 50-50, right? And then at that point, your money's out too, right? If you do it correctly with a BRRRR, then at the end of the day, there's very little money that's stuck, right? There's soft cost that's always goes with stuck, but it's minimal.
If you're buying the house correctly and rehabbing it efficiently, you should be able to get all that money back out.
Correct. Mm-hmm. Yeah.
All right. So Oscar, let's get down some nitty gritty.
Mm-hmm.
You have a project. I'm a first time lender. I have some money in a 401k. You want a project with me? I want to do a project with you. How do we get started? What kind of questions should people be asking? What kind of paperwork protects me, protects the investment? How does that look?
Yeah. So first things first, if like say you and me, Shane, we just met for the first time, like say through RIA meeting, like a Zoom like this, right? And you contact me at afterwards, say, hey, I'm interested in learning how to fund one of your deals, right? What I would say first is not giving the paperwork, right? But what is your why, right? What is the why of your wanting to lend, right? Just so I can help you better, right? Because we have so many different projects, right? Are you wanting to learn about real estate and you have the funds, you just can't pull the trigger because you're afraid you're going to fail and just lose money, which is a lot, 90% of the time people are doing that, right? But they don't want to pull the trigger, even though they think it's a good deal, because they don't think they're afraid to screw up, right? They're afraid to failure, right? So they don't do it, and then they be like, oh, I wish I've done it, right? Because 6 months, 6 months later, it's like, oh, I could have made like 50,000 or 60,000, right? So
there's a thing it's called analysis by paralysis, right?
Correct, right? And
looking at the
so
deals, looking at them, but never go do a deal.
Yeah. So I would ask them that first, right? What would you like to do, right? So, and a lot of times they want to learn it, right? Which is now I'll tell them what our a little bit of my background and everything, because I won't just it's not a straight like, okay, well, this is 1, 2, 3 and everything. I'll tell them, this is what I do and this is how I do it. This is how we do it, and just kind of give them a rundown through my company and how many flips and everything we've done, and even some referrals if they need it, right? And it's easy enough for me because I do a lot of flips, and I anything that I flip is available on the MLS, right? So you can I'll just show you like, this is what I did, how much it sold for. You can see it, right? So you can see the profit margin and everything. But the important thing is the why, right? So, and some people, they come to me, look, Oscar, I really want to buy some rental, and I don't mind partnering with someone in the first couple rentals. And that's how I got started in real estate. I found another investor that has some funds that he accumulated about $1 million, that he wants to get started in real estate, but he has analysis paralysis, right? And he is looking for someone who can kind of partner and be just kind of not only as a money partner, but someone who can just go through the things together, because sometimes the journey is better together, right? So you just have to find the right people with the right personality, and this person we actually together, because we have such a good personality and we such have a good connection, we were able to go from 0 to 10 in less than a year, rentals. And we split everything 50-50, right? And it was all using his money. But guess what? It's worth it, because I don't mind getting half of the pie rather than getting nothing at all, right? Because again,
Correct.
opportunity like that only comes once every year. The opportunity is different. The 2016 that we had, the 0 to 10 properties, now they're worth double.
Yeah.
Right. So this is what I'm saying, where there's always deals to be made, and we're usually always looking for funds. I'm always actively talking to people with our deals and everything, and not only, so there's private money lender and there's professional money lender, right?
Yeah.
So sometimes you meet with a real estate professional that also a professional money lender, which is fine. They usually charge a little bit more because their goal is to make more money, right? So there are projects for them, but a lot of times I'd rather go to a private money lender, which is mom and pop, and someone who say, hey, Oscar, I have this money that I'm saving so my kid can go to Harvard, right? But I'm not happy with my performance, right? So sometimes you have to be some sort of an official financial advisor, right? Because I've been through it too. I know how they feel, because I have 2 daughters. One of them is going to college in 2 years. So guess what I do with her college fund? I lend them too, at a good interest rate, versus just putting them into mutual funds or whatnot, right? Or even 529, right? So that's a different discussion, right? I'm not going to argue.
Right.
Some people's going to say, well, 521 is tax free. You know what I mean? And why don't you do that? Blah, 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 and everything. Well, this is my plan and I'm sticking to it. There's nothing right or wrong, right? If I can make like 8 to 9 to 10, sometimes 12%, I'm okay with putting that instead of just putting it in 521 and getting it tax free.
And,
Right,
and again,
so.
as you said, if you're doing a BRRRR method with the funds, and you're also getting equity in a deal, not only is your money making nice returns, but you end up at the end of that, you get your money back out.
Yeah.
Property.
Yeah. And to continue the answer to the question, right? So that's the why first, right? So there's a lot. I mean, I just gave a bunch of reasons that I encountered so far, right? I like to make money on my 401k. I like to get buy and hold. I like to at least partner with you on a flip. I'd like to. This is a fund that I need to grow in 4 years when my kids go to college, right? And I tell them, okay, I can put this money to work, and I can guarantee you this type of return. And in 4 years, this is how much you will make, right? So this will actually, make you money, so that you guys, your kids can go to school or have additional funding to go to school, right? So and then there's another one, which is, okay, Oscar, I just want to use this so that I can use the cash flow, the interest, to make a good living. Right. And sometimes they already have a business that's already working. So I'm just like, this is just my side income. So I can, this is my play money. Right. So I don't mind getting $2,000 a month, just so I can do my grocery or get my Starbucks. Right. So it's a lot. So once you find out why, then you set up the plan. Right. So sometimes people are afraid. They'll be like, Oscar, I don't know. I just want to lend this. I trust you. I see you, your flips. I see, your network. But I can't lend this for a year. So, that way I'll show them, okay, well, this project's, like, say, in the middle of completion, it's going to be 3 to 6 months. I think it's a good way for you to start. So I put them there, for example. Right. And then get their commitment to just go through it. And then after we talk again, and at that point, there'll be more comfortable knowing how it works and everything, right? Yeah. And from there, we do the paperwork, obviously, right? So the paperwork is different if you're a mortgage state or if you're a deed of trust state, right? Illinois is a mortgage state, right? So everything usually, you have a mortgage, which usually gets recorded. You have a promissory note, right, which is an official IOU saying that, Oscar owes Shane this much money, and how is Oscar going to pay Shane? Yes. Right, every month. What are the consequences if Oscar doesn't pay Shane? What are the penalties? what is the term of the loan, right? And what are the things that needs to happen in order for this promissory note to be executed? For example, is there going to be a personal guarantee? Is there going to be collateral? Which one is the collateral, right? Those are all listed in the promissory note, right? And a lot of times I also do personal guarantee. Actually, 100% of the time I will do personal guarantee, which, as a lender, you should also ask for personal guarantee, right? A personal guarantee means the loan will recourse, right, to the personal, meaning me. I'll be liable personally. So, if something goes wrong, there's a way for you, Shane, to just get the liability for me personal, right? And it doesn't stop with just the LLC, which is a limited liability, right? There's also the rent and lease agreement, which just basically covers to say that, if you decided to rent this place, or for example, if you're making money from the rent and from the lease, and for some reason you're not making payments, or you could not satisfy the term, then the lender has the rights to those lease and rents, right? And one thing that I also do is I also do a business affidavit, right? Which means that me, Oscar, and the LLC promise to use that funds just for business purposes, and not just run to Vegas and gamble all those money, right? So, and all of these is basically a standard templates that a lot of the commercial banks, right? Actually, every commercial banks, either conventional loan or whoever has a mortgage on the house, you probably can go back to their loan documents that they sign and go look through it, and they'll find those documents, right? Yes. They'll find a mortgage document, they'll find a promissory note, they'll find a personal guarantee, right? That's definitely it. There might not be the lease and rent because that's a mortgage, right? And there might not be a business affidavit because it's not a business loan, right? But because it's a business loan, interest-only business loan usually, that goes to the LLC as the borrower, then we usually have the borrower sign a business affidavit.
When you take out insurance on a property, the project that you're doing, do you add the borrower as an additionally insured?
Yes. So we usually add that as the initial insured. Now, if it's a private money lender, we don't usually take a lender's policy, right? Because that's something that is cost additional, right? So because I know a lot of time with money lender is all about relationship, and as long as it's the mortgage is recorded, we don't usually take a lender's policy. But sometimes, again, depending on your why and how you want to do your business, you can have your borrower get a lender's policy. That's fine too, right? But I tell my lender, I'd rather give them a bonus at the end rather than give them the lender's policy, because a lender's policy goes, it's just it's never really get used, right?
Right.
Obviously, you get your title policy, but the lender's policy is usually just something that hard money lender or commercial lender needs, right? That's never get used, right? I think the important thing is more of a like say a builder's risk insurance that name the lender as additional insured.
We have a question, a couple of questions here. One is a personal guarantee doesn't necessarily mean you'll pay. So if you get to the point where someone hasn't paid, at what point do you get an attorney involved?
That's a great question, right? So the mortgage and the promissory note usually, and before we answer this, I'm not a lawyer, right? I'm not an attorney.
Right.
A lot of the documents are legalese, right? A lot of documents, if you look at 25 pages of documentation, I probably can only explain the first 2 pages, right? Because those are the terms. That's what I understand, right? I cannot be late. If I late, there's this percentage that I have to pay, the terms, and how do I return your money, and where do I go to pay you, right?
Right.
The other parts is a lot of times, what happened if the loan default, right? What happened if you can't pay, right? So, I would, involve an attorney where so when there's a 90 days of non-payment, this is the how Illinois do business, right? In terms of foreclosure and everything. So it's kind of important for a lender to learn this too. When the borrower hasn't paid for 90 days, that's when we can start a pre-foreclosure process, right? And that's where you kind of have to engage a foreclosure attorney, right? And obviously that's after you exhaust talking to the borrower and either the borrower ghosted you, either the project's not moving anywhere, they're not making payments, they're not making interest payment, they go over the terms, right? Say, for example, the terms is 6 months with no extension, for example, and then they can't pay and they can't refi you out, or they can't pay off the principal and interest. That's where you start, quote unquote, negotiating either a new term with the borrower or engage a lawyer after 90 days, right? Usually I say 90 days because that's what usually Illinois is, right? So, and that's usually in Illinois. Again, I'm very specific to my state. You have to offer different options to the borrower first, right? Obviously, one of them will involve loan modification, right? If they're still talking, and how you can modify the loan with new interest rate or whatnot and have them a new payment, right? Which, by the way, happened to me during COVID. That's why I know this stuff because of my personal experience with. I had Finance of America that gave me a loan, right? Commercial lender, and during COVID, the property's on the market, but at one point you can't sell. No one's able to leave the house. Moving. Right? During when the COVID shutdown happened, I had 3 properties on the market, so I didn't have any activity for like a good 8 weeks. Right? I mean, after 7 weeks, then they start saying like, when you go in, you got to find out, you got to wear a mask, only 1% at a time, and you got to clean up, blah blah blah, and everything, right? Because no one knows what's going on. They think like when you touch something, you die, right? So, so what happened was my loan was due, right? So we had to go through this, right? I was still paying, but my loan was due, right? So we had to go loan modification and everything, right? So you have to give the chance to borrower to correct it, right? So one of them is loan modification. The second one is you do what we call a deed in lieu of foreclosure, right? So there's a chance for, which happens to some people too, right? I've helped people kind of arbitrate unofficially, right? So at the end of the day, they decided to like, well, okay, it's a project that we can't finish, so we're gonna just quit claim the deed back to the lender, right? Now, if you do the loan correctly as a lender, there's equity in there. Right, that's the important thing, right? That's the underwriting part in the meeting before you give the loan, right? Before you give the loan, right? Assuming all the underwriting is done correctly. So because at the end of the day, when the borrower default, you are able to ask for a deed in lieu of the foreclosure, so you can get that property back and sell it back on the market to recoup your principal or whatnot. Right? So so that's kind of like the 2 options that you have before you actually engage in further with the lawyer to do a foreclosure, right? Because because you are a lender and you have a mortgage and they violated the term, right? And then now you can create a lawsuit to, again, if you're in Illinois, it'll be through judicial court. You'll go through the foreclosure motion. Right, you exhaust all this arbitration effort, which is the loan modification, the deed in lieu of foreclosure. If they're not working, they're not tackling anyway. That's when you continue with the foreclosure.
In the beginning, how important is it for the borrower, so the lender, to ask for, another way around, the borrower that asks for the lender their FICO score? Is that's something that you get asked often as?
I never got asked the FICO score. Like, to be honest, a lot of the private money lending that I do is based on relationship. So I always give a recommendation to all my lenders to get to know their borrower. I would not, as a lender, I would not, especially if I don't know the market or if I don't know the area, I would not lend just solely based on an attractive interest rate. right? Because that's most likely that's going to screw you, especially if you're a first time lender or just don't know the market. And I'm speaking to myself because I'm involved right now in a bad deal, right? It's a friend loan, right? So
Yeah.
so guess what? Even though I have like 5, 6, 7 years of lending experience, I always also fall, sometimes I fall into like the friends trap, right? So I'm like, oh, I only need the money for 90 days, return, blah, blah, blah. And I'll secure it on this, I'll secure it on this property. And I'm like, okay, fine, 90 days because you're my friend. And I didn't do a good due diligence, right? So,
Yeah.
I'm dealing through this now, right? The good thing is he's still paying interest. The good thing is he's still trying to communicate and try to salvage the term and everything. But, it's a trust that is broken,
Yes.
right? So so it's more of a trust that makes me as a lender. I would see the credibility, right? The credibility and the experience is what I see more than the credit score, right? Because at the end of the day, with private money lending, it's a hard asset lending. So you care about the asset, right? You should care more about the asset more than the FICO score of the borrower. Now you could do a background check if you want, just to make sure that he hasn't filed bankruptcy or criminal, background check and everything. That's fine, but a lot of
It really
times,
comes down to that experience, right? That's
Mhm.
written on the FICO score. Is the
Right.
going to get done on time, on budget?
Yeah, and the best way is to really just the old way of asking referrals. Can you tell me, give me a phone number of like your 2 previous lenders, or you've even current lenders, right? Um, Give me a phone number of your hard money lender, just so, because I use all ways of getting money, right?
Mhm.
Either from commercial loan, conventional loan, private loan, just different ways. So I do give them the reference, right? And they can say, yeah, they did this deal and he paid and everything. So, so I would say that is the most important one, more than just checking credit score. But it's only $35 to check score. So, I mean, I don't mind if people check my score, So it's not something that, oh no, that's like, I mean, because we do that for our tenant anyway, so it's not like a big deal for me. So
Right. That's
yeah, if Shane
same way
wants
if
to
you ask
lend
them.
money to me, and it's like, hey, I want to do a background check and credit score, yeah, okay, so
Yeah, that I agree 100%. I don't put a lot of effort into it, other want to know it. But if somebody asks me for it, we would provide it.
yep, for sure.
In your example that you gave, if you were dealing with somebody new and they had smaller amount of money or wanted a shorter term time frame, you said, well, maybe you can put them in a project that was already ongoing.
Mm-hmm.
How does that look as far as lien position when you do something that's already ongoing?
That's a great question, right? So a lot of times at this point right now, we have skin in the game in a lot, right? So
Yeah.
I very rarely ask 100% of the purchase and rehab price, right? I still do for bigger projects, but for smaller projects, because I have such an active network of private money lenders that say, hey, Oscar, I have $25,000, for example. What can I do with this, right?
Mhm.
Well, with $25,000, I would say, okay, well, there's this project. We already put like $30,000 on rehab so far, right? So when you put your 25,000 here on second position, because we already have first position, for example, right? You are still secure in second position, because guess what? The ARV, or what we call a loan to value coverage, it's still there's still a good spread to it, right? So that's a very important point too when you underwrite, right? Never actually pass about 75% or 80% of the loan to value, right? Especially if you're newer. I mean, I would even go more conservative too, right? So that way, if anything happens, you can know, rest assured that there's already a margin built in, right, on the projects, regardless of where the project is in terms of the rehab and everything, right? So, but yeah, that's why I always ask their why, right? It's like, okay, well, you have 25,000. I have this project, right? You can be involved and you can learn the paperwork. right? And that project's probably going to go for like another 3-4 months, but at least you get your money worth, right? But usually for that, I do ask them for their commitment to do 2 to 3 to 4 projects, right, instead of just one time, because there's a lot. We spend a lot of time, right, to kind of coach them, to mentor them, quote unquote, to become a lender, right, and the paperwork and everything, right. So we do ask them to at least, if you're happy with the way we use your money, or we make your money work and 100% passive, then you'll agree to fund the next projects too, right? So yeah, that's been working out. I don't have anyone that says like, nah, I don't want to work with you anymore, right? So usually it's more things happen. It's with people in 401k and IRA, they like it when they see the return, because it's really just they don't do anything, right? The money just comes in
Money just
either at
comes
the
in.
end of the project, right, or monthly, right? So sometimes private money has to pull out their money only because they're lending out of their own cash, right, in their own bank, right? So they would have some life something in life happens and they need that money, so which is fine too. Some things happen and we understand. But a lot of times I do require them 60-day notice, right, just to make sure that we can find another lender, or we can shift some operational funds, right, to cover that.
Right.
So
Yeah.
yeah.
And I know Cindy's listening. She's not necessarily doesn't need to chime in, but I'll speak on her behalf. I consider her to be a very savvy, very aggressive investor. And when we were first met and we're doing some lending deals, she was very adamant about getting her money back 30 days. You want to do
Yeah.
lending, right?
Yeah.
What she found is that turns into a full-time job chasing down the next deal. So your money's never
Correct.
sitting there waiting. So you make a higher interest rate for that short-term loan, but then you also have downtime while you're chasing down that next deal.
Mhm.
You gotta get that right balance of decent interest rate return for the amount of time that you're locked into the deal. And so it goes hand in hand with some of the questions that are coming up here. What are some of those interest rates that you're seeing and for what type of project?
Okay. That's also a great question, right? And this is where I say, are you a private money lender or are you a professional money lender, right? Because professional money lender will just look at the interest rate, right? And that's fine, right? I sometimes I would pay 4% and 1 point, right? But that was the beginning of my career, right? When I don't have a lot of resources. And what I find is when you try to chase the interest, you get to find people who just started, right? People who just don't have a lot of resources, don't have a lot of connection yet. So there are more risks to be involved, right? People say like the more risk, the higher the return, right? And that's true with money lending. And we just follow the bank, right? If you're an FHA and you have your score, FICO score is lower, then you get charged higher interest, right? The same thing, if you don't have any experience and you want to do this for the first time, but he's a good guy, he's going to be a good borrower, the project is good, then charge him 15%. You probably do it, right? I probably would have done it when I was beginning, right? But if you ask me now how much I charge, I'm fair to all my private money lender, and I charge them I give them between 8 to 10%, right? And I know people's going to be like 8%. I already put that in stocks. That's fine, right? Because my private money lender, and I say private in capital, they don't chase just the profit. They chase relationship. They chase security. They chase that peace at night, knowing that your money is safe, right? So again, the why is very important, right? I'm okay with like 12%. I'm okay with 12% and 2 points, right? But that better be $1 million loan.
Yes, yeah.
Right, and I'm okay. Like it's the same as hard money lender, right? So right now my hard money lender is giving me at 10.99%, right? So I'm okay with giving you 10.99% and 1 point, right? But can you cover $250,000 to $400,000 loan, right? if you want to be in first position, if you have a $400,000 that you can loan to me, I'm totally okay with that, right? We want to create a win-win situation, right? But if you're working with smaller funds, $25, $50, $75,000, a lot of times those funds are not enough for purchase and rehab, right? A lot of times those funds are just for rehab, for example, right? And me as a responsible borrower, I'm not going to put you in third, fourth, fifth position. I stop at second, right? Either you're first or you're second, right? But if you're first, then usually that's $100,000 and $150,000 loan, right? If you're second, that's usually less than $100,000 loan, right? Because we're just using it for rehab funds, for example, right? So these are all the things that you need to know, right? In terms of interest rate, what people are willing to pay, and instead of just giving different interest rate for different lender, we set it all across the board. So there's no, like, for example, like, I'm just going to pick a couple people here, like say Lori and Deb talks, like, hey, how much are you lending to Oscar? And Lori's like, oh, 10%. Oh, and Deb said, well, how come I only get 8%?
Right.
I don't want those kind of talks, right? So I'll be very honest, right, in knowing your why. All right. If you just want 100% safe, 100%, because I will sell all my asset and I will sell all my houses and all my private residence to pay you back. Right. So that's the kind of, credibility and everything, that I have.
We had that discussion with a group of investors here recently, and Cindy and I were saying, Oscar's in the same boat. Here we are, we have our businesses are now online. All of our potential clients really can see everything that we say and do. Reputation means everything. So if one deal goes south, everybody that's going to watch this video is worth more to me than anything else. I will make that right so that we can go on and have a future together.
Right. Yep. So yeah. In the private money lending, is the credibility is everything, right? It's not worth screwing up one deal, just because. Right. So yeah. So I hope that answers about the rate, which is very good questions and all the valid points, right? I need, and I'm willing to work with different investors with different rates and everything, right? And it's just depend on how much risk they're willing to take.
So Oscar, are all your loans right now on fix and flips, or are you also going out and buying properties that are long-term rentals with little work?
Different states, different strategy. In Illinois, I'm actually kind of in the middle of moving my assets, either from long-term rental to mid-term rental, or from, if I find out that, if I look at my books and I see this property that I own, it's not really making enough cash flow for, and because of the fixes and everything, right? And also the tenant quality, then I would just sell that, right? I would sell that and I would either 1031 or just take the cash and buy a vacant lot and develop it in Florida, for example, right? So which is what I'm kind of doing. So I'm mostly, I really, really slow down in buying and hold in Illinois, and I'm trying to grow my portfolio or upgrade my portfolio of doors in Southwest Florida.
Okay.
Right, and I'm doing that with a partner too in Southwest Florida, so that we can do this together, either exploring long-term rental, which is your most common one, and to midterm and short-term, right?
Is there a specific area in Florida, that Southern Florida?
Yeah, we're in Southwest Florida, which is in Charlotte and Lee County. So you probably know Fort Myers, which is Southwest Florida. Yeah. That's one area that I'm in, and we're also in Port Charlotte, all the way up to Sarasota. So those are the areas that we're focusing between flips, and then rentals, and also new construction.
All right, wholesalers, there's your homework assignment. Find Oscar some properties. He gave you an area, so.
Yeah.
So I'll just switch gears just for a second, Oscar.
Yeah.
How can people get hold of you if they want to talk to you about a property they have in Sarasota, for example?
For sure.
Yeah.
Yeah. I mean, the best way is just through Facebook. I'm very active with Facebook, so Messenger is best for me. And also Instagram. My handle is Oscar the Closer. So you can connect me through Instagram, and I'll be able to respond to your DM better than just the regular text or whatnot. So.
Well, again, we appreciate your time. What other lending do you do? Let's flip the script for a little bit. I know you talked about you borrowing money. What kind of lending do you do?
Yeah, that's a good question. So I do a couple different things that's more creative than normal lending. So, for example, I have about $100,000 that what we call a loan swap, for example, right? So what it is that, for example, like Shane, you're a full-time real estate investor, and we know each other, and we know that we are successful in our own way, and I trust you, and I trust the projects and everything, right? And then you happen to have $100,000 from your IRA or 401k that you can't touch, right, for like 10 years or whatnot, right? Even if you can touch it, you don't need it. You know what I mean?
Right.
So what we do is, we quote unquote give each other's loan, right? And now it's still two separate loan. It's not like we're just giving each other's money, right? It's still two separate loan, but it's a long-term loan, right? So, and we still pay each other's interest to our 401k or to our IRA, or things like that. But we call that a loan swap because the amount is similar, right? And the interest rate is attractive, meaning it's usually just below the market, right? Because my goal is not to make money on that. My goal is to make sure that we have operational funding that we can use for long term, right? So I have that going on. I have $100,000 that I lent to another partner, another investor, for about going 2 years now, right? At the same interest rate, right? And you'll be surprised of the rate, right? But again, the goal is not for me to make money of that. The goal is now, Shane will also lend me $100,000 or $105,000, so it's different, right? On a different project and secured by a collateral that I own free and clear, for example. So it's not something you can do in the beginning, right? It's something where if Shane owns a property that has that is free and clear, or have like a loan that is 20% loan to value or something, meaning like you have a lot of equity. Your equity in there is 80%, for example, right? So even if you put a loan on that, it's still well below that minimum loan to value, right? So you can use that money, and we agree that we're going to use that money operational funding, right? So that's the kind of thing that I'm doing too. I still give loans, and I usually give loans as a rehab loan. I give that too, and I'm okay with second position at a higher interest rate, right? Again, higher risk, higher the reward, right? Yeah. So I'm following just the rules of just giving the normal loan application and everything. But again, the important thing is I have to know the person, right? I have to be confident that at this point, if something's wrong, that I'm okay with taking back the property, and I know the property is gonna I'll be able to recoup my principal and the interest.
And what that loan swap allows you to do really is have more flexibility with your funds or your self-directed IRA.
Correct. Yeah. Mm-hmm. And again, at the end of the day, you are your own financial manager, right?
Yeah.
Like for example, $500,000 of my 401k, right? I'm only using $100,000 to do the loan swap, right? Another $200,000 to do a 1 year at 10%, right? Another $100,000 to do, 6 months at 12% on second position, right? So, you're as long as your money is working and you're happy with it, that's the important goal, right? And that's why I love, private money lending, because it gives you those options, right? At the end of the day, you're averaging more than, if you were to give that to even a top mutual funds manager, right? And it's, to me, because I'm in real estate, I know the game, and I know it's more secure rather than, a piece of paper, right? I'm not going to put it in crypto, so I don't, I mean, I have stocks, but I don't look at it, right? I mean, I have some stocks that I buy out of my personal money, but I don't even look at it. Those are play money for me, right? Yeah. So, don't get me wrong. I mean, I have some crypto too, but I'm not, I'm not going to invest my money that's important to me in crypto.
And your
Right? I
children's
just play
college
for
fund
fun.
isn't.
Yeah, no, right? Yeah. So it's just like going to Vegas and like spend $500 on blackjack, and it's like, okay, you're gonna lose anyway.
Right.
Yeah, that's
You're
how I
okay
see
with-
crypto. And if I make money, then I'm happy. Right? When I, like, 20 years from now, if I have a $500,000 from crypto, okay,
Okay.
that's fun money, right? But I'm not gonna rely on that, right? So
Yeah, if you're okay with taking it to Vegas and spending it and not coming home with it, that money,
yeah,
that's what you want to do and buy crypto.
exactly.
Okay with that.
Yeah, nothing wrong with active trader. If you do crypto full time, I know you can make money. I know you can get a couple Lambo, but that's not for me.
One of the things that Cindy had come on here and kind of said here is, again, that same thing about she wanted that return, even though the interest rate is lower than what she was getting on the short term. Long term wise, it frees up her time for finding deals, but it was also kind of broke even. As you said, you have the high peaks for the interest rates, but then you have all these gaps in between deals that are time. So you average that.
Right. Yeah. And if you think about it, I mean, even bank rate, the mortgage rate changed all the time, right? Private money, hard money lending, the rates change all the time. So, I don't recommend people to just have a fixed rate. You might get fixed rate to a certain degree, but your risks might be different, right? You'll be finding people that is newer to the game at a higher risk, at a higher rate, and that's fine.
When some people first come to us and they're just starting out in real estate investing, one of the questions we kind of get to is, what do you have more of? Time? Money.
Mm-hmm.
Some people come in and say, oh, I work a full-time job. I'm trying to get into real estate investing as a side. I want to be here in X number of years, right?
Mm-hmm.
Maybe the way to start then is by private money lending, getting in on deals. That's not going to take a lot of your time finding deals, because there are people out there like Oscar or Shane. There are people in this group who have deals in their pocket, more deals than we have money to look at.
Yeah.
So that might be your first way into the real estate game, and do a lend and learn opportunity.
Right.
Come in and go, no, I've raised enough money. I've quit my full-time job. I want to do real estate investing. I want to do all that. Okay.
Mm-hmm.
Well, that's a different look, right? It's a different why. So a different strategy implement. So now maybe we put you out, boots on the ground. Let's find you some deals. Let's show you how to find deals. That's how you raise your equity into the stakes. And whether it's bringing capital table or your time or your expertise, there's all sorts of different ways to partner up in JV.
Mm-hmm. Yep. Mm-hmm. There's a lot of make money together, right? As long as we understand what is the goal of each other's partnership.
And I love your mentality, Oscar, is the way you look at the markets. It doesn't matter if the market's going up or down. There's always a way to make money in that market. I mean, they look completely different.
Yeah.
But, you know, as long as you understand where the market's headed and understand the numbers and the projects, if you're savvy, you can find a way. Where there's a will, there's a way.
Yep. Yeah. And this is why if you're also starting to land, it's very, very important to, see that credential, right? And the person that you're working with, and how have they been doing in the past 1, 2, 3, 4 years, right? What are their projects? At least the last 2 projects, right? We're not, obviously, I love to give chances to to people too, right? So a lot of times I listen to their pitch, and I like to help them, right? But at the same time, we need to understand the risk, but if there's still to be made, we just have to be creative with the term, right? And a lot of times, like I said, instead of being a lender, I would offer that I'll be a partner, right? And that way, we get to share the decision, because I want to be involved in his success, his or her success too, right? So
this is just a quick side chat survey. Who here is looking for funds on a deal? Go ahead and put a 1, or opposite, who has funds that they're interested in loaning out? Go ahead and put a 2 in the chat. Just want to get an idea where people are at in this private money lending need and opportunity. All right, we got 1 response. So, and thanks, Barbara. But as you go through,
that means only Barbara's gonna get.
Yeah, she's waving. I appreciate you.
Yeah, she's gonna get all the money from here.
She's a rock star. But so again, Oscar, any parting information, suggestions for anybody and how to get started?
I would say just actively, look out for people or investor around your area. Make connections. If you're a borrower, it doesn't matter if you borrow or lender, right? You make connections, because you'll find that if you're sincere and you are, just doing things the right way, people will give you resources, right? Either people, like, even I get a lot of referrals, like, hey, Oscar, like, I don't have money, but this guy has money, right? I don't have money, but my uncle has money, right? And my uncle has been trying to, but I can't help him because I don't know this real estate thing yet. I don't want to screw up his money, right? I mean, these things happen, right? So if you're a borrower, always just kind of show them the deals that you're trying to do. Show them what have been possible, because that's what I did in the beginning. It's like I keep looking at underwriting deals, right? And I couldn't get the money, so I keep, anytime I talk to people, I'm like, yeah, I'm actively looking for deals. I'm actively underwriting deals, like, and I and check this out, right? This property that I could have bought was sold for this, right? But I couldn't get the funding fast enough, right? And usually people with money will say, oh yeah, let me know if there's another opportunity, for example, right? So always tell people what you need, but always tell people what you can give too. Right now, if you're a lender, right, obviously listen to people, right? Listen what they need, right? And either you can find someone that can fulfill their needs, and you could be part of it, right? It could be a 3 people partnership, right? It could be that, okay, you're not confident in giving the money unless someone else who's more experienced is involved, for example, right? There's always ways to do a JV, where your money's secured, right? I mean, I do things, for example, me and my partner in Florida, right? She doesn't have the experience in rehab. I have, I don't know, 60 plus, whatever it is, that I've done, and I can show that to a private money lender or hard money lender, right? So guess what? We form a partnership, an LLC, and she gets that credential, right? She gets that credential, and we can use her money as skin on game, right? Skin in the game for whatever lending that we have, right? But what I bring is the credential. What I bring is success cases so that people are confident in this project, right? So again, there's a lot of ways to do deals, a lot of ways to help each other, a lot of ways to bring someone, right, that has that missing link, right? If you need to find a good contractor, find a good contractor from referral so that you can present this contractor as your partner so you can get the funding,
Right.
right? You can always do that, right? You can find another investor, say, hey, man, I have this wholesale deal. Instead of giving the assignment to you, can we partner on this? So I can watch you and I can get credential and I can have my uncle's money safely because I know you're doing the deals, right? That's your learn and earn right there. It involves 3 people, but it works. You better have a piece of the pie than nothing at all, because an opportunity is lost if you don't do anything.
I've always tried to let everybody know there's power in networking, right? People in the side chat, and you're in a Zoom like this, should be letting know, are you a buyer? Are you a wholesaler? What are you looking for?
Yeah.
Use that networking. You know, Facebook's a great opportunity to be out there working those connections.
Yeah.
People know what you want. And if you don't let the world know, you won't get that feedback. So as soon as you step there and say, I want to buy a house in Sarasota, let the group go out and help you find that.
Yeah.
Any other questions for Oscar tonight? Oscar, really greatly appreciate your time. I love what you have going on. One of these days we'll get back together and would like to talk about businesses and looking at how to evaluate a business and buy a business.
Yeah, for sure.
A whole nother hour discussion that we could do. So I'd love that. Again, the best way to reach Oscar is on Facebook, through Facebook or Facebook Messenger. Let's see.
Yep. I'm in the group. I think I'm in the group.
You are
so
in the
you can
group?
so you can always search for my name.
What's your
Or you
last
can
name, Oscar?
It's Setiawan, but no one ever spells it right. Easier way, if you go to Instagram, Oscar the Closer. That's basically
Oscar
it.
the Closer.
Yeah. Yeah.
Well, again, I appreciate everybody that showed up tonight. Thank you so much, Oscar.
Thank you.
And
Thank you.
appreciate it. And Cindy, I appreciate you. I know you're on vacation. You're listening. Thanks for organizing this meeting tonight, and we'll be in touch, everyone.
Thank you.
All right.
We'll see you next week.
Thank
night.
you.
Thanks so much, everybody.
Thanks for
Thank
having me.
you.
Thank you.
Thank
That was
you.
awesome. That was awesome.
Thank you very much.
Have a great night. Bye.
You too.
Good night.
Bye-bye.
Bye-bye.
Bye.